Canadian Prime Minister Mark Carney says a proposal for a new oil pipeline in Canada is highly likely.
Look, the bottom line is a new east-west coast pipeline in Canada is good for Canadians. It's good for world markets in that we have access to more supply.
But for the first time, Canadian liquefied natural gas is heading overseas.
As President Trump ramps up tariffs against Canada, Ottawa is responding, not with speeches or countermeasures, but with something far more strategic. For the first time, Canadian liquefied natural gas is being shipped directly to Asia, bypassing the United States entirely. At the same time, a new cross-country pipeline is being fast-tracked. It's not retaliation, it's leverage, and it could reshape the balance of power in North America's energy and trade relationship. In early July, Canadian Prime Minister Mark Carney confirmed what many had suspected. Canada is moving ahead with a proposed pipeline connecting Alberta's oil fields to the Pacific coast. This east-west pipeline would allow Canadian oil to bypass American refineries entirely, a strategic shift at a time when U.S. tariffs are rising. According to former U.S. Energy Secretary Dan Brouillette, Canada's push is more than economic. It's political. With American refiners buying most of Canada's oil, the country has long been boxed in. This pipeline could change that. But oil isn't the only focus. In British Columbia, LNG Canada has now shipped its first cargo of liquefied natural gas to North Asia. The $40 billion project, the largest private investment in Canadian history, has capacity for 14 million tons annually, and it could double. Suddenly, Canada is no longer just exporting energy to the United States. It's entering the global market.
Well, as you know, it addresses two key priorities for the Carney government. One, trade diversification, which is the new mantra in response to Trump's tariffs. So it fits into that. It also fits into the other objective of Canada becoming an energy superpower.
Why does this matter now? Because nearly 97% of Canada's oil and gas exports still go to the U.S. That's been a long-standing vulnerability. It means lower prices, less production, and no access to rising demand overseas. But LNG is shifting that. Asia now accounts for over 70% of global LNG demand. Countries like Japan, South Korea, and China are looking to cut coal use and need reliable natural gas. Canada, with its Pacific coastline, has a key advantage. A tanker from British Columbia reaches Asia in half the time it takes from the U.S. Gulf Coast. That means Canada can compete and win. If this shift continues, Canada could significantly reduce its reliance on American buyers. And in a trade negotiation that matters. It changes the power dynamic. Because if Trump continues to use tariffs as pressure, Canada now has an option. Redirect supply away from the U.S., not just in theory, but in real volume. This is no longer a bluff. It's infrastructure in motion.
North Asia story. The project comes as Canada looks to diversify its trading relationships outside of the U.S.
The United States might be the world's top oil producer with a record 13.4 million barrels per day in July 2025, according to the Energy Information Administration. But production is only one part of the equation. Delivery is another. America still faces challenges building the pipeline capacity needed to move that oil. It also relies heavily on stable imports from Canada to balance refining needs, especially in the Midwest and Northeast. If Canada cuts or diverts supply, U.S. refiners could face higher costs. Consumers could see higher fuel prices. Even more, industries tied to energy, like electric vehicles, heavy manufacturing, and construction, could feel the pressure. Canada's new LNG routes, if fully scaled, could also undercut future U.S. export ambitions. While the Trump administration promotes its own Alaska LNG project, it's years behind. By the time American gas reaches Asia, Canadian cargo may already be there. Trump's tariffs were meant to corner Canada, but they may have pushed it to finally break free. Pipelines and LNG terminals don't respond to tweets. They reshape long-term leverage. And this time, it's Canada laying down the infrastructure, not just the rhetoric. As natural gas flows westward and oil bypasses old routes, the question isn't whether Trump will escalate. It's whether the US is ready for a trade war where energy is the counterpunch.
Donald Trump's entire shtick as president is that America is being ripped off by foreigners, and we're kicking people out, not letting people in.
There was a time when the world dreamed of coming to America. To walk through Times Square, to see the Grand Canyon, to stand beneath the Statue of Liberty and whisper the words, "This is the land of freedom." But today, the dream is fading. Not because of a global recession, not because of natural disasters or war, but because America, once the beacon of welcome, is slowly closing its doors. Foreign tourists aren't staying away because they've stopped loving American culture. They're staying away because America no longer loves them back. Because under Donald Trump, the United States has sent one message to the world: you are not wanted here. And now, as the world turns its back, America is preparing to pay the price. Tens of billions of dollars in lost tourism revenue, hundreds of thousands of jobs in peril, and a once thriving image of hospitality replaced by fear, suspicion, and walls. What experts are now calling a war on tourism began with the Trump administration's radical policies on travel, immigration, and border control. In just a few short years, the United States went from the most desirable destination on earth to a country associated with travel bans on Muslim-majority nations, lengthy, invasive visa screening, border officers trained to treat visitors like suspects, political rhetoric branding foreigners as burdens or threats. According to the U.S. Travel Association, between 2017 and 2020, America lost over 10 million international visitors. That's not just a dip in tourism, that's a freefall. The result? Nearly $150 billion in lost tourism spending, money that would have gone to American airlines, hotels, restaurants, retail stores, theme parks, and workers. And this isn't a past problem. Trump is running again and doubling down on his promise to shut the border even tighter. He's proposing new travel restrictions, more visa limitations, and even threatening to ban tourist access from entire regions. The message to the world is clear: we don't want you here, unless you look, speak, and act like us. But let's make something clear. Not every foreigner is coming to steal jobs or overstay their visa. Millions of international travelers come simply to experience what they were taught to admire: Disneyland, the Las Vegas Strip, Broadway shows, the museums of Washington, D.C., the natural beauty of Yellowstone or Yosemite. And yet, they're turning away. Not because they stopped dreaming, but because the dream turned cold. Today, tourists worry. Will I be pulled aside at the airport? Will I be humiliated during questioning? Will I be viewed as a threat just because of my accent, skin tone, or passport? That's not a vacation. That's a risk. This fear, this psychological rejection, is costing America billions. Oxford economics projects that if Trump's restrictive policies return in full force, the U.S. could lose another 7 million international tourists annually by 2027, with revenue losses topping $35 billion per year and over 500,000 tourism-related jobs wiped out. And who suffers? Not the politicians, not the billionaires, but the everyday American workers, the waitress in Orlando, the cab driver in New York, the tour guide in Arizona, are all paying the price for policies they never voted for and don't benefit from. America was once the face of freedom, curiosity, and welcome. But if we keep telling the world, you are not safe here, you are not welcome here, then the world will stop coming. And it already is. Tourists from Europe, Asia, Latin America, once loyal to the American dream, are choosing other destinations: Japan, Canada, France, Italy. Places that still greet travelers with open arms, not fingerprint scanners and interrogation rooms. So when Trump screams, "Make America Great Again," the world hears something very different. Go away. We don't want you here. The tragedy is not just economic, it's cultural, it's symbolic. Because when tourists stop coming, they don't just take their money, they take their stories, their admiration, their desire to connect. If America insists on shutting the world out, it may soon wake up to a bitter reality. A nation that stands alone, with empty hotels, silent airports, and lost opportunities echoing through streets that once welcomed the world.
U.S. President Donald Trump is threatening to impose 35% tariffs on Canadian imports.
Now, in a statement from Prime Minister Mark Carney that was posted late last night, just before midnight, he says that Canada will work towards a revised deadline of August 1st.
Just before midnight, Prime Minister Mark Carney posted a quiet but pointed message. The Canadian government, he wrote, would continue defending workers and businesses. And as part of that response, Canada was now working toward a revised trade deadline of August 1st. No televised statement, no political theater, just a calm, strategic adjustment meant to buy time, lower the temperature, and keep doors open. It was a subtle move, but it carried weight, especially in contrast to the unpredictability coming from the South.
What we're seeing here is the president is now beginning to outwardly weaponize these tariffs as his signature economic policy, not only against other countries, but key allies and partners of the United States.
In this second term, President Trump has elevated tariffs from economic tools to political weapons. He doesn't just use them against adversaries. He uses them against allies. Brazil was hit with 50% tariffs just days earlier, reportedly over its handling of former President Jair Bolsonaro. Copper imports got a 50% duty with almost no industry consultation. And now, Canada. The rationale behind the move was familiar. Fentanyl trafficking, retaliatory duties from years past, and barriers to U.S. dairy products. But behind the surface, analysts say this is about leverage. Trump sees Canada not as a trade partner, but as a bargaining chip. And as always, the threat comes with a deadline. Sign a new deal by August 1st, or pay the price. It's not the first such ultimatum. Earlier this year, tariffs on steel, aluminum, and autos were all hiked. In each case, the announcement was sudden, the criteria vague, and the targets wide-ranging. But as experts have warned, including from the conservative Manhattan Institute, even Trump's fentanyl claims about the northern border aren't backed by substantial evidence. Still, the bigger issue may not be the tariff itself. It's the instability it creates. For Canadian businesses, it's not just the cost of duties, it's the unpredictability. Will the rules change next week? Will they get worse? As one economist put it, uncertainty is the tariff you don't see, but feel every day.
Carney goes on to say that throughout these trade negotiations that the Canadian government has supported workers, supported businesses, and will continue to do so.
In response, Prime Minister Carney did not hold a press conference. He didn't make a fiery speech. Instead, he posted a message just before midnight. Canada, he said, would continue supporting its workers and businesses. The government would stand firm while working toward a new deadline, August 1st. It was a shift in tone, away from confrontation toward resilience. Carney emphasized Canada's progress in fighting fentanyl and its willingness to collaborate on public health. He framed the moment not as a battle of personalities, but as a test of long-term policy. Behind the scenes, his team has been working with provinces and territories to build a more integrated national economy. Projects of national interest are moving forward. And trade diversification is becoming not just a goal, but a necessity. This strategy, measured, quiet, but firm, has drawn mixed reactions. The leader of the Conservative Party criticized Carney for moving the deadline instead of holding the line. Bloc Québécois raised concerns about prioritizing oil exports over broader diversification. And Unifor, Canada's largest industrial union, representing over 320,000 workers, called Trump's threat economic extortion. Still, Carney has held his course. No escalation, no retaliation, yet, just focus and time. For over 60 years, the US and Canada have built one of the closest economic partnerships in the world. From the Auto Pact to NAFTA to USMCA, goods and people flowed across borders, supported by rules, not threats. That structure is now under pressure. Tariffs are becoming daily headlines. Deadlines are moving targets. And what once felt like a dependable alliance now feels like a negotiation with no floor. Carney's approach may not generate headlines, but in a climate of escalating trade brinkmanship, it might be the only thing that prevents collapse. Because here's the risk. Even if Canada complies, even if it signs a deal by August 1st, there's no certainty that Trump won't shift the goalposts again.